Hey, Crypto Hotep here with another investing video. We are on week 19 of the family portfolio. And if you're unfamiliar with the family portfolio, feel free to look at week number 1 in the channel. And that first video will go over my methodology, thought process, strategy, the reason why we're doing this, and just the beginning of the family portfolio. And in a nutshell here, I gave my family a short list of stocks that I did some research on that I felt comfortable with, and I asked them to pick their favorite stocks or companies, quote unquote, to hold. And they selected those companies, and then we chose M1 Finance as our broker of choice and technology. With M1 Finance, you can actually have a main portfolio, and then you can have kind of like sub portfolios within it, what they call pies. And so each one of my family members, my wife, 3 kids, have their own pie, which consists of their own stocks that they did choose. And, each week we just go over the activity on this family portfolio, the balance, the rate of return, any dividend activity, the projection, any analysis of any stocks, and just track the overall investment journey. So with that being said, and before we jump in, again, this is the PSA. This is not financial advice. Nothing in this video is financial advice. Please consult a professional before you do any type of trading or investing. And before we get to the balance of this week, we look at the balance of last week, just to remind ourselves where we came from here. So last week, week 18, we were at 767.49. With a weighted rate of return of 13.83% and dividends at $4.53. I believe the weighted rate of return was the highest for the year that it's ever been. And with that being said, let's jump here into this week. So this week, the balance is 773.26. with a weighted rate of return of 12.61%, dividends unchanged. The activity between this and last week, not a lot has happened. The biggest thing that's happened with Broadcom, that's part of my holding, is the stock split. So that's why you see these kind of funky numbers here. This is basically M1 Finance performing that stock split. So, the price and the holdings are correct. We did receive a dividend payment from Federal Realty Investment Trust of 16 cents. And then there was a payment from Nintendo for my kids at 29 cents. Now, again, if you're not familiar with these videos, you may be looking at these amounts as just pennies, and you are actually correct. These are just pennies of 29 cents, 16 cents. But the goal of it is not to look at the actual dollar amounts, but to just focus on the process and be consistent in receiving these payments. Because if the holdings in Nintendo or Federal Realty, for instance, increase, then these dividend payments will also increase, and that's part of the goal. Okay. So let's look at the portfolio here, and let's jump in. So as always, we go bottom to top. On the bottom again is my wife. I think this may be the 4th or 5th week in a row here. Weighted rate of return down in the negative, down over 13%. Market gain down over $5. And the value of it currently is $56.74. As if you have been following, we had a lot of Celsius holdings, and we did buy a lot of Celsius here. And again, Celsius has pulled back a lot here. So much so that currently these holdings are down over 43% for Celsius. In addition to that, we have Pepsi and my wife's holding Google. Both are doing well in the green. We will be looking at Celsius today. I will be looking at the chart today for Celsius. There's no big news on Celsius currently that's standing out. Their earnings don't come out until August. But I do want to check out the chart just to see what it looks like. Let's see what we got here. Next, let's go to our middle stocks. Currently up over 7.5%, and with just a couple cents on the dividends. But overall, this portfolio is operating very nicely for our middle. Amazon up over 3.25%. They did have their little Prime Day that they typically do around the summertime every year. They did say it was a record-breaking sales year for Prime Day. Costco having a monstrous year. Nobody's stopping Costco right now. Nintendo, again, we were in the red in Nintendo for about a month or so. Nintendo has come back. And then Target's making a comeback here, up over close to being up over 4.5% there. Let's look at our oldest, as we all know, if you've been following. Keep it simple. It's two stocks. We have McDonald's and we have Apple. Okay. McDonald's has pulled back. I looked at a chart on McDonald's on the weekly time frame this week, actually, and ironically, they were making the golden arches pattern on the chart, which is not good if you're a buyer. Usually, if a stock or an asset makes the golden arches, which is just an M style, that usually means that the price is going down, and it is. It went down, but it's at a key level right now. So I'm very optimistic with McDonald's where it's sitting at currently. Apple, nobody's stopping Apple right now. You never bet against Apple, and up over 36%. Weighted rate of return is 12.84%, and then we have 25 cents in dividends. Okay, let's look at our youngest. So our youngest is probably up the most out of everyone, up over 28%, carrying the portfolio on the back. Dividends earned 2 cents. Why is that? Tesla. Again, week in and week out, when our youngest is up over 20%, it's typically because of Tesla and also Apple. I can't knock that. We are still buying Starbucks. Starbucks is down over 6%. But guess what? Tesla was down over 15% as well. But guess what we did? We just kept buying Tesla. Why? Because we feel as though Tesla's a good company and we think that it'll bounce back, and it did. Starbucks, very similar. No one is not going to Starbucks anymore. Starbucks will always be around if people enjoy coffee, which they do. So I think that Starbucks, I've seen a lot of sales come out for their coffees, special happy hour type of deals. And I think there will be a turnaround with Starbucks. Right now, we're buying it cheap. All right. And with that being said, we will look into mine. And with me, my portfolio is up over 8%. And dividends earned, we have about $4.09. And we are doing pretty well here. So technology obviously is up, with NVIDIA. We have Amazon in there, Apple, of course. So up over 14%, double digits. Real estate's doing good. Real estate's in the double digits as well. And why is that? Well, that's because of public storage. We have Federal Realty. We got the dividend payment. And then also O. I did add O into the portfolio. And O is doing really well. It's fitting in nicely with that, with the realty portfolio. A realty section, real estate section, I should say. Pharmaceuticals up. Restaurant and food is down. And the reason, Domino's Pizza had earnings come out today. They did beat earnings per share. The revenue stayed line, but there was weak outlook. And the street, i.e. Wall Street, did not like that. So DPZ did start tanking. We do have Starbucks here. Again, similar to our youngest, we are buying Starbucks. Hershey's doing okay. And then the GOAT, as I call it, Coca-Cola, is still pushing strong along with Texas Roadhouse. And so with that being said, guys, for this week, not looking bad at all. We went down 1% in the rate of return. Not a big deal. But overall, portfolio steadily climbing, getting close to 800. The balance sitting right now 773.26, weighted rate of return of 12.61, and a market gain of 54.97, almost $55. One thing that did stand out to me was the Celsius holdings for my wife. So the Celsius holdings, I do want to cover here in what I saw on the chart. So I flipped to the chart on Celsius just because I was very curious with my wife's holdings and how we are such in the red with those holdings, what the price chart looked like. So I did draw out some levels here, some weekly levels. As we can see here, though, we do have unfortunately, a head and shoulders pattern here, or a double top, whatever you want to call it here. So right here we have a top, and then here we have a top. And as you can see, price began cascading down here. Okay. In addition to that, this was overbought here at this level here, very close to the 80 mark on the slow stochastic indicator as well. So there has been a sell-off on Celsius considerably. It's crashed through major key levels weekly here, but I believe some relief is coming at the key level of $50. $50 is a great psychological level, price-wise as well. So we potentially could see some relief from Celsius. And another optimistic thing is the Celsius has pushed through this moving average. This is the 50 MA. So this is the 50-day moving average. Below it is the 200. There, we can scroll out here. Let's scroll out here just to check something. Okay. Yeah. So Celsius has rode that 50 MA for a while. Back in 2022, it did crash below the 50 MA, but never below the 200. So I'm still optimistic on Celsius because we're still above the 200. That's kind of the last stand right there. So we potentially could see a little bit more downside that would snatch this low right here. And this low is looks like from January of this year. So what may happen is we may see price come down a little bit more, take this low out, only to come back up and bounce back. Or at least that's what I'm hoping. That's what potentially could happen. And if history does rhyme, because history doesn't repeat itself, if it does rhyme, then that has the biggest potential to happen if I'm looking to the left here. So with that being said, guys, we will end this video. Hey, the video's a little bit shorter this week. But if you want to see anything, feel free to like, comment, subscribe on the video. And as always, I hope these are helpful. And thank you guys, and happy investing.